Hi there, this is David Geller with Jeweler Profit. It's 6 o'clock on Wednesday, May 20th, and I've made this short video to give you a little bit of information how to enter your PPL loan proceeds from the Small Business Association into your QuickBooks and a little bit of other stuff to help you. It's very short. So I'm going to get started by telling you we're going to assume this, that the PPL loan we received was $25,000. And if you might remember, in the very beginning there was emergency disaster loan, and they said in the beginning it was going to be $10,000 for every business, and you were going to get it in 3 days. Well, they quickly changed that, and they changed it. Instead of giving every business 10 grand, so I have 2 employees, myself and Rini, I would get 10, and for a store with 25 employees, they would get 10. They thought that was rather unfair, so you get $1,000 per employee. So I would get 2,000. If you had 20 employees, you would get 10. If you had 12 employees, you would get 10. If you had 7 employees, you would get 7. There were a few people I talked to that indeed got the $10,000. You are lucky. So the EIDL grant is, honest to God, your gift from the U.S. government. It does not have to be repaid. The PPL loan, actually it's probably PPP, I call it PPL, the PPP loan for the payroll program loan, you have to give the money out within 8 weeks, and if you do, and I'll explain it in a moment, then you're not liable to pay it back, nor the interest, which is a very small amount. So I just want to go over how it's calculated. So let's just say in 2019 your payroll was $10,000 per month each and every month. You actually average it. So you add up all your payroll for 2019. That would be the same thing as adding up all the W-2s and divide it by 12, and you get an average. So we're going to use $10,000 as an average monthly payroll, and you multiply that times 2.5 times. So the SBA is going to give you $10,000 times 2.5, which is $25,000. That's to help you pay for 2 things. Pay the employee's payroll for 2 months at $10,000 a month over 8 weeks. So the government wants you to pay their payroll rather than having unemployment benefits. If you pay it, then you're going to give them health insurance and vacation and maybe retirement, whereas the unemployment people won't. And you know what kind of debacle it is for anything in the government to get done on a timely basis. So if they just give you the money, they feel reliable that you'll give it out correctly. And I'll go over who has to get it and who doesn't. So you have 8 weeks to give the money out. The 10,000 times 2 is 20,000. So $10,000 a month, 2 months. You're going to give out $20,000 to employees. They're giving you an extra 5 in this money here. They're giving you an extra 5 for rent, utilities, and health insurance. I've had some jewelers tell me they were upset because that doesn't cover rent and such. Well, it's just a formula they use to throw money. They're standing on top of the Empire State Building, throwing buckets of money over the side. Everybody pick up your share. They're not trying to be exact. So we're going to assume we have a PPL loan of $25,000, and we're going to assume that we have a EIDL grant of $5,000. So I'm going to move this Word document out of the way, and I'm going to show you in QuickBooks. So if you use QuickBooks Online, which I'm not happy with, I don't like, I use QuickBooks Desktop, it pretty much would look the exact same way. So before we go further, we have to look at our chart of accounts. So you can go up to Company and click on Chart of Accounts. You can hit the shortcut Control+A. If I helped you with your QuickBooks, it's up on the icon bar. So what we're looking for is 2 things. We have to make a short-term liability account for the payroll protection program loan that we get. The money that you get, the $25,000, it's not a grant yet. It is a loan, and you have to pay it back at the moment. When you give out all the money and do it correctly, and you'll have to send in paperwork to your bank because they're the ones that gave you the money, then they will go ahead and forgive it along with the interest. At that time, it'll move out of being a loan, and it's going to be income. It's going to be other income, and it's going to be non-taxable. You can assume that next year, in 2021, when you do your 2020 tax return, there'll be a new IRS tax form field that will ask the question, how much did you get for this PPL? And you will not be taxed on it. So, first thing we need to do is, I like to have numbers. We need to figure out what is the next available number to use. You'll notice I like hundreds or fifties. I like even numbers. So my last other current liability is number 24,000. I'm going to make the next other current liability, I'm going to make it 25,000. I'm going to come down here to the account, new, come down here to other types and hit other current liability, hit continue, and I'm going to make it 25,000. Hit tab, and I'm just going to put PPP loan. That's all. I'm going to hit save and close. I'm going to have to make a different number. I already have that number. So I'm going to make it 26,000. So here's our other current liability. I'm going to come back up here just for sake of organization. Click on the bank, click on account, hit resort so that you can see it's here at the bottom. So we've made our PPL loan account. We need to come down here now and make a income account. So I'm going to make a 70700 account. I'm going to come down here to account, new. I'm going to click on other account types and choose other income. Other income, by the way, is income that has nothing to do with running a jewelry store. It's not sales, repairs, and whatever. I'm going to hit continue, and I'm going to number this 70700. And I'm going to call this PPL and EILD, non-taxable income. This is where we're going to put all the money. The EIDL, when we get it, is going to go into this account immediately, and after we are granted the gift of the PPL, actually let's make that PPP, when we grant the PPP, it will come out of the liability account and come down here to other income, and it'll be non-taxable. So now we have this account, and we have our current liability account. Now, I had sent out an email a couple weeks ago of a couple ways to enter this in QuickBooks, and I've decided the best way to do this is using class in QuickBooks. If I've helped you or someone else has helped you with QuickBooks and you have 2 or more stores, you may already be using class. Class in QuickBooks is the same thing as a store. So we're going to come up here to Edit, come down here to Preferences. We're going to click on Accounting, click on Company Preferences, and we're going to click on Use Class Tracking. Now you notice up here it says QuickBooks Desktop 2019. If you're in multi-user, it'll say dash multi-user, and you have to be in single user, which I am in now. So we're going to click on Use Class Tracking. Now, I want you to unclick Prompt to Assign Class. Every time that you enter a bill or a check or a deposit, if you don't choose a class, it'll aggravate you. And we only need it for the PPP money. So we're going to click on Accounting, Company Preferences, Use Class Tracking, and unclick this. We're going to hit OK. Now, if it says multi-user, you will come up here to File, and it'll say switch to single user, but we're in single user now. So we now have, if I come back here, we have checked and we're using class. Now that you've done class, you can make a class. So we come up here to List, Class List, and we're going to come down here to the word class and make a new one. And we're just going to call it PPL. This is the preparation you need to get everything ready. So we've made a liability account for PPL loan. This is where we're going to put our $25,000. We have made an other income account to put the $5,000 EIDL money that we're going to get and the $25,000 when we're granted with that. And in addition to that, we have made a class. So now we're ready. And so we're going to now receive today, and today is the 20th. We're going to assume that we have received this money today. So first thing we're going to do is come up here, and there's always 3 ways in QuickBooks to do something. If I've set you up, you've got to deposit $. If not, you can come up here to Banking, Make Deposit. And so we have someone's check we need to deposit, but we're going to just hit OK and bypass this. So we're now on the second screen. I call this the second screen. We're going to put the money in our bank account. You do not need to make a new bank account. Now, some of the banks that give you the money might indeed make you a new bank account. Well, that's fine, but we still need to do everything that I'm showing you with class to run reports. So we're going to put the money in our bank account. It's today. And I'm going to put over here, always erase the memo field and put what it is. If you deposit cash and checks, you would do this. And if you're depositing your credit cards, you would do that so we know. But we're going to choose ECH, electronic transfer. And I'm going to put the first one, EIDL money. So remember now, our EIDL money was $5,000. So we're going to receive the $5,000, and this is the income right away. It's not a loan. So we're going to click on this column right here for account. Click the down arrow. We're going to go all the way to the bottom. We're going to use this PPP and EIDL non-taxable income, and we're going to put $5,000. And the payment method doesn't really matter. If you want, you can choose or make something up, but it doesn't matter. So we're going to now deposit this money in our account. Hit Save and Close. And if we come up here to the check register, you'll notice that we have a deposit of $5,000, and in the memo field, it has that memo that we put there. So that's in that account. And if we were to pull up a profit and loss statement right at the moment, I have saved one here. You can see the 7,700 account has it here. If I haven't saved it for you, come up here to Reports, Company and Financial, Profit and Loss Standard. Of course, this is just a demo QuickBooks. There's no income, there's no expenses or anything. But you can see that we already have it here. Now, let's talk about the $25,000 that we're going to receive. So let's just say it came in the afternoon. We're just going to use today's date. We're going to come up here to make a deposit. Just hit OK for a blank screen. We're going to come over here and put PPP money. Now this is going to go in the liability account. So I'm going to click the down arrow, and you scroll down till you see Other Current Liability. And we're going to click on PPP Loan. And we're going to come over here, and it's $25,000. Going to the bank account, today's date, PPP money. It goes in the PPP loan, other current liability account, and we hit save and close. Now if we go to our check register, we have $5,000 that's free and clear. We have $25,000 we're going to have to either give away or repay, one of the two. But now we have it in our bank records. So if we open up our profit and loss statement, you notice the $25,000 is not here because it's not on the profit and loss statement. It's on the balance sheet. So if I come up here to bank reports, company and financial balance sheet, here's the loan for $25,000. It's on the balance sheet. It is not income yet, but it is yours to use to pay employees, and you're supposed to pay 75% of this, or the $20,000, to employees over an 8-week period. So now we're all set. You can take the money. Now if you were to write a check to an employee for payroll, so let's use this, and we're going to pay this employee. So I'm going to come down here to payroll. We're going to use sales staff, and we're going to pay this person, let's just say for easy sakes, it's $1,000. I'm not doing the payroll with taxes taken out. This is their gross paycheck. So we want to be able to see this $1,000 here, and we want to see it on PPL report. So what we need to do, because we came up here and we made class, if you've never used class, you now have a column here that you've never seen before. This is where we choose PPL. So we're going to choose the PPL for that employee, and you would do it for everybody else, including when you pay the tax. So let's hit Save and New, and let's just come down here for payroll, and let's do the payroll taxes. And let's say it's $850, and we'll use the U.S. Treasury Department. We'll add that quickly as a vendor. So now we're going to pay our federal taxes. You got to add it here. So now if we hit Save and Close, well, let's hit Save and New, and let's do rent. And let's type rent down here. Here's our rent, and our rent is $3,500. Got to remember, for a class, we must do this one. Now, if you're going to do something else, as of, for instance, advertising, the government's not reimbursing you for advertising. So do not choose a class, just leave it blank. And when you do that, you won't get a pop-up that says you left it blank. That's why we came up here and hit uncheck prompt to assign class. So when we come up here and look at our profit and loss statement, notice we have advertising, and we have our payroll, and we have our rent. I don't have other numbers in here to show you. Let's see if I put anything for this year to date. I don't remember if I did or not. No, I did not. So, but this direct mail has nothing to do with PPL. So the reason for doing the class is this. after you put in all your checks and bills or whatever that has to do with the PPL, which is payroll, rent, utilities, and phone and website, if you're going to need in a couple of months to give the bank a detailed report of what you spent in this. So this is going to include everything, a whole bunch more, including sales and whatever. You would come up here to Customize Report. You would click on Filter. You would hit Class, and this will just show you stuff that you entered for class. Watch this. So see the advertising, watch what happens. So now it's only PPP money. So we come up here to Filters, clicked on Class, and did that there. And if you'd like to save it on the icon bar so that you could do it later, or if you want to save it up here under Memorize Reports, if you want to do that, you can come up here to Memorize on this P&L and do a PPP P&L report. And we're going to save it in, well, let's just leave it for the company. So from now on, instead of having to come up here and do this and then customize and all that, whatever you put in for the checks, just come up here to Reports, Memorize Reports. We did it for company. There it is. And it's already set up for you with the class. The only thing you'd have to do is change your date range. So now we have it all set up and it's done properly. You'll be able to run your reports for the to give to the bank when it's time to give them information how you spent it. I'm going to show you the balance sheet. On the balance sheet, it shows our $25,000 PP loan. So you could show the bank the balance sheet for this and point to that. But you could also do this. You could come up here to the chart of accounts, scroll down to the PP loan, make it a little bit bigger. And if you open this deposit and you can see the money that we did, you could print this. See what it looks like. Well, that wouldn't show PPP, but you could go into the register. You could come here in this memo field and put PPP money when we made the deposit. Then when you open up your liability account, it's right here, and you could easily print this and you would see a little report of the money that came in, and you could show that to your bank. So that's the whole setup. That's how it works. Now let me show you what happens when it's time, when you give all the paperwork to the bank and they say, you're forgiven, we love you. So we no longer have a liability. We need to send this money all the way down to this account. When it's time, there's always 3 ways in QuickBooks to do this. So you're probably used to, in a check register, to use accounts and all that type of stuff to enter checks manually, like if you went to the post office, Office Depot, or you hand wrote a check. Well, you can do the same thing with balance sheet account. You could double click and open this, and then you would want to decrease this by $25,000. So on the day that you're forgiven, you could open it in the decrease column just like a check, and you could come over here, go all the way down, and choose the PPP 7700 account. Forgiven by Bank of America. Thank you. So now when we hit record, we no longer have any money in this account. And if we come back up here and look at our profit and loss statement, you can see down here we have other income for the 30. And if I double click, it was the 5 that was a grant, and it was the 25, which is the forgiven amount. So you see right here it says net ordinary income. Of course it's a negative because they don't have any sales in here. This would be your real taxable income. This is extra. So this is not going to be the bottom. It's not going to be reported income on the tax return. It's going to be above it. So like I say, there's always 3 ways to do something in QuickBooks. So one is to open this up and just put something in the decrease column. I'm going to remove that. And for people who like journal entries, we'll do a company, make journal entry. And we're going to choose the loan account, and we're going to choose at the very bottom the PPP account. And to increase an income account, which this is, you use the credit column. We're going to put $25,000 here. We're going to put $25,000 there. And watch this number. We're going to hit save and close. And it went to 0. We used a journal entry. And if we come all the way down here at the bottom and do a profit and loss statement, it's right there. And let me show you the third way. So we still have the $25,000 loan. You can come up here to banking, use the transfer button, and you want to choose the liability account. And the other account we want to choose is the PPP. Oh, you can't do it from here. So you can't do that there. So it's either going to be the journal entry or just open it up. Come over here to the decrease column. I like this one the best. And do it that way. That's how it's done. I want to spend just another moment with you and show you a few things. So the example I gave of 2 months salary, $20,000, you have to pay that over 8 weeks. And then you're going to have to show some type of paperwork like a 941 or something that you've paid this out for them to grant it. They're also going to want to see evidence of your rent and insurance and all that. And that's why I had this made up this way in QuickBooks, so that you could help to show it. And if you need to give infinite detail, you could always double click and open it, and you could print this. You could also probably come up here and just print a copy of every check. That said, the next question is, when do you have to start paying the employees to pay them back to be granted this? Well, there's a lot of people had a lot of different questions on it, and I want to tell you what I found out. I found out that the SBA says it starts within a week of you actually getting your money. So I deposited our money May 20th. It has to start from then. So if you go to Google and you search, when does the PPL loan program have to start and end, you're going to get this. So I clicked on this and I got this pop up. So this is the SBA site. It's also right down here below. You notice right here. So when I searched, it's right down here, and when I clicked on it, this opened up. So this is the SBA site, and it's this second one, Paycheck Protection Program Loan Information. When I clicked on that, then I received this screen, and I scrolled down to frequently asked questions for lenders and borrowers. We're borrowers. And I want you to notice this was updated just yesterday. So now when you click on that, we came here. And I downloaded the PDF file. When I did that, then we have a PDF file. And the pages aren't numbered. But if you go to number 20, question number 20, it is forgiven over an 8-week period. When does the 8-week period start? It begins on the date the lender first disperses the money. So dispersing is when you got it. And when you look on your bank website, if you got your money today, May 20th, it starts May 20th. So you must disperse your very first one no later than 10 days. The lender must give you the money no more than 10 days later than it was approved, which, a lot of people said it's taken a month. But in any event, you have to start you have to start your payroll period for the PPP within when you get the money, which was today. You have to pay it over 8 weeks. You have to pay out at least that much money. So if you were to figure your average payroll was $10,000, 2 months is going to be $20,000. You do not have to pay the $20,000 to the same humans. Everybody could have quit. You could have hired new people. You just have to pay the same amount of money to the new people. So if you had 5 people and you paid $10,000 a month, so 5 people, you pay $10,000 a month over 8 weeks is $20,000. If you have 4 people, you need to pay everybody, including yourself, the $20,000. If you decide, because what you can do is give people more money for the 8 weeks and then pull them back after that. The government is giving you the money. So if you've gotten $20,000, but you have only 3 employees and you're going to pay out 16, you will have to pay the $4,000 back. It's better just to give everybody the money, including yourself, so that you can spend it. The government wants you to spend the money on the employees. Anybody who's getting unemployment, they have to get off of unemployment to come back to work to get the payroll. They can't double dip. You can't get unemployment plus you pay them. If you decide to offer them their job back and they were making more money on unemployment, and in fact many people could be making more money with the unemployment, then you are to report it to the unemployment division so that they will stop it, or you can't pay them. That's a different subject. So coming back to Google, if you Google this question, you'll get this. You'll come up here and you'll get Paycheck Protection Program Loan Information. You'll get this. Click on Frequently Asked Questions if you want. I'm sure you've already done your loan amounts. You'll download it. You'll open it up. And I just wanted to show you it has to be over 8 weeks. The very first top of the page looks like this. And I want to let you know that while I was looking here, I came further down and I saw good news. Congress could extend it. Well, Congress has, the House has proposed another $3 trillion called the HEROES Act, not the CARE Act, to help fund even more help. The Senate doesn't like the way it is, so as you know, they'll go back and forth and that kind of stuff. The important thing to tell you is they're thinking about extending the forgiveness period. So instead of 8 weeks, they're thinking about 24 weeks. So they're thinking about 24 weeks or so to forgiveness, because some people are not open yet. The states are not going full blast. So I think they're going to go ahead and give out more money. If you didn't get your PPL money, they're going to give out more money. They're probably going to give out more stimulus money. If you go to the SBA site and look at EIDL funding, you'll see that it's no longer available. So it's the PPL money. I had read someplace that an economist figured that Washington would have to give out $10 trillion for this to be fixed. The idea behind giving you the PPP money, the United States is one of the very few countries that is not following what everybody else in the world is doing. All other civilized countries, or the governments, are giving this PPL money directly to the employers to give out to the employees, and the employees don't have to show up for work. Whereas for you, they have to show up for work. The idea is they want everybody to stay home to flatten the curve. So instead of giving out unemployment paychecks, other countries are giving out money to employers to give to employees. And we're the only country that's not doing that. So anyway, I hope that this has helped you an awful lot. If you have any questions, just best to ask your bank or your CPA, but I'm pretty well versed in this, and if you have any questions on this, just send me an email and I'll shoot you something back immediately. So thank you very much. I hope you're safe and doing well. You've gotten your money, or you're going to get it darn soon. So this is David Geller. Have a profitable day.